So we are back on problem 13, and problem 13 required us to solve problems 11 and 12. So it says, suppose the firm's net capital spending for 2010 was $910,000 and that the firm reduced its net working capital investment by $120,000. So if we look back at our previous work, we know that operating cash flow is EBIT plus depreciation minus taxes. You're saying to yourself, I don't have any of those numbers. So how do I solve this? Well, we need to remember these other formulas. Cash flow from assets equals operating cash minus change in net working capital minus net capital spending. So with this formula, and the information from problems 11 and 12, we can now solve for this equation. So first we must start with solving for cash flow from assets. And we know that cash flow from assets equals cash flow from creditors plus cash flow from stockholders. So cash flow from creditors. And this was from problem 11. So I'm going to click back and link to my answer on problem 11. And then cash flow to stockholders. And this was from problem 12. I know it was not assigned, but you can't solve problem 13 without it. And so my cash flow from assets equals minus 33,500. So the next thing I'm going to do is rearrange the formula above so that we're solving for operating cash flow. So if I want to rearrange the formula to solve for operating cash flow, I'm going to say that operating cash flow equals cash flow from assets plus change in net working capital plus net capital spending. So my cash flow from assets, I just solved for this right here. Then I have change in net working capital, which was given in the problem, as minus, because it's a reduction, minus $120,000. And then my net capital spending, given in the problem, was $910,000. So my operating cash flow equals cash flow from assets plus change in net working capital plus capital spending, or $556,500. Now moving on to problem 19 in the homework. Net income and operating cash flow. During the year, Balke Paving had sales of $242,100,000. Cost of goods sold and administrative and selling expenses and depreciation were respectively $1.425 million, $435,000, and $490,000. In addition, the company had interest expense of $215,000 and a tax rate of 35%. Ignoring any tax loss, carry back, or carry forward, what is their net income? What is their operating cash flow? So this is where we're going to set up an income statement. So we know that sales were $2,400,000. We know that cost of goods sold, or COGS, was $1,425,000. We know that selling and admin was $435,000, and depreciation was $490,000. Then I'm going to come to the EBIT term, which is cost sales minus cost of goods sold minus selling and admin minus depreciation. Then I have interest expense. Which was $215,000. So then I have EBT, which is earnings before taxes. So I have a negative EBT. So on tax, instead of multiplying this by 35%, which would give me a credit, a tax credit, instead of having to pay, I'm just going to put 0. And so therefore my net income is equal to EBT, earnings before taxes minus taxes. Now it asks me for my operating cash flow. Operating cash flow, the other is EBIT plus depreciation minus taxes. So I have EBIT, depreciation, taxes, operating cash flow. So I have a net income. So I'm losing money on my income statement, but I have a cash flow which is positive $540,000. So this is what I was talking about in class when I said there is a huge difference between net income on an accounting statement and cash flow. The reason that there is a difference is because depreciation is a non-cash item, and therefore we get to deduct it for the purpose of calculating taxes and for the purpose of calculating net income. It doesn't actually affect taxes, cash flow. So therefore we had a positive cash flow of $540,000, but we had negative net income of minus $165,000. Okay, accounting values versus cash flows. Problem 19. Suppose they paid out $400,000 in cash dividends. Is this possible? If no new investments were made in net fixed assets or net working capital, and if no new stock was issued during the year, what do you know about the firm's long-term debt account? So first of all, a firm can still pay out dividends if net income is negative. It has to be sure there's sufficient cash flow to make these dividend payments. The assumptions in these questions are made. The assumptions made in this question are the change in net working capital that equals the net capital spending equals the net new equity, which equals 0. To find long-term debt, we first must find the cash flow from assets. Cash flow from assets equals operating cash flow minus change in net working capital minus net capital spending. So we have operating cash flow which we already solved for in problem 19, and our operating cash flow is $540,000. The problem states that we have no change in net working capital, and that we have no net capital spending. So these both equal 0. So our cash flow from assets is equal to our operating cash flow. Next, we can find cash flow from stockholders. So our cash flow from stockholders, just insert a line here. Make sure I label this. So our cash flow to stockholders equals dividends paid, which we want to pay $400,000, minus net new equity, which was stated that it was 0. So our cash flow from stockholders to stockholders equals our dividends paid. Now, we know that cash flow from assets equals cash flow from creditors plus cash flow to stockholders. Our cash flow from creditors equals cash flow from assets minus cash flow to stockholders. And then our cash flow from creditors, the calculation, we know the total. It is interest expense, which we solved for, which we had in problem 19, $215,000. Net new borrowing, which we don't know, would equal which we do know cash flow from creditors. So basically now we need to solve. So our net new borrowing is $75,000. We borrowed $75,000, or we increased our long-term debt by $75,000. And that is the end to homework chapter 2.